Okay. All right. I think we are live. Let me have a look if it's running.
I think we are.
Are we
Loads
running
of
it
people are already on.
as well? So I did connect it to the Facebook group.
I think
I think it's running.
we're on YouTube and StreamYard.
Face-
We've got a couple of people in here already, which is great.
Yeah, I think it's also on Facebook. I can see it. Right. Let me see. Are people laughing at my glasses yet?
No, people are laughing at the fact that I don't have glasses. Sammy's just said I look 12 years old, so I'm not sure
Ah,
whether
there
to
you
take
go.
that as a compliment or
I'm
not.
wearing the weird glasses and people are laughing at you still.
Yeah.
Right.
I don't know about all you guys, but Andy looks a little bit like Mr. T today.
Do you know what? Honestly, with my tan and this beard, my missus goes to me, you actually look quite black." I've turned into a black man. I do go ridiculously dark.
You do. You
I
do.
really do. What's happening, everyone? Been a little while to do. Dan surprised me and said, "I'm going to join you." So even better.
Gate crashing.
That's nice. It's nice. Yeah, so guys, I promised you guys a couple of weeks ago that we'll do a little live, just have a little chat, a little catch up, answer some questions, nothing serious, and see some familiar faces. Give you guys some help, give you guys some inspiration. It's the end of the week. How's your week gone, Dan?
Yeah, good mate. Really good. Yeah, it's been busy. I've been posting quite a bit in the new CSI 2.0 group. Just a few setups on dollar pairs. But I think throughout August and even now, short-term volatility seems really high. Like pairs are moving really, really quickly, but they're not doing it in the long run. So in the long run, you're seeing like this chop and this whipsaw. So a lot of the positions we're in are just kind of in and out within the day, which is not necessarily a bad thing, but it's difficult trading conditions if you don't know what you're doing for sure. How have you found it?
Yeah, I mean, I don't know if I mentioned it to you, but I've been focused a lot more on swing trades, really working on trying to spend less screen time. I still do my day trades and I still enjoy day trading, but I like to have a second sort of more passive way of making money as well. As I get a bit older, Dan, I want to do less or be less in front of the screens. And I think it's nice to show that to students as well that don't actually have the time to be in front of the screens. That you can do it, without having to be in front of the screens, by placing sort of longer term trades. So, I've been doing okay. I mean, it's a broader horizon, but it's a good way to do things. So I'm in a few positions at the moment that I'm planning to run for a few weeks, and we'll see how it goes. Joe joined us as well. So, but people are asking about the glass. By the way, these are not sunglasses. They actually are very good for you if you're in front of the screens. They block out the blue lights, and it helps you really focus. So, I actually wear them all the time.
I know who you look like. Not just Mr. T. You also look like Ice Cube from NWA.
Oh, there you go. Okay,
there you go.
I don't know what that person looks like, to be honest. Ice Cube.
you don't know Ice Cube.
I can't remember what he looks like, to be honest.
You're joking me. One second.
Have you got a poster of him in your house?
In my office.
Let's have a look. Let's say hello to everybody else rather than just chatting rubbish between us.
yeah. Whilst you say hi to everyone else, I'm going to find a picture of Ice Cube.
Okay, George, Linda, Mike, Jayesh, Sammy. I know some of you guys are on YouTube. Some of you guys are on Facebook. we should. I don't know if there's a way. Terence, I don't know if you're on here as well. I can see you posted in the Facebook group. Yeah, like I said, these are not sunglasses, but they block out the blue light, and it's actually, you should try them. Yeah, he looks quite.
It's uncanny.
Now, listen, you don't want me to get out the Dennis Taylor pictures.
Yeah.
That's why you supposedly broke your glasses, mate. So you don't.
Yeah, I'll stop. We'll leave it there.
Right, everybody. Now, listen. Let's so a few of you guys have sent in some questions. Where's the Bella Ciao music on? I was enjoying that.
I can put it back on for you. I thought you wanted to be nice to listen to.
There
you go.
So, do you know what I'm going to do? I'm going to do a screen share. Let's have a look at this screen share. Joe, how are you? I've missed these kind of events. I remember you always going to the toilet to watch us. Are you there right now? In the toilet of your work? That's not. Oh, Roy's saying swing trading sounds interesting. Yeah, let's speak a little bit about that. I can tell you some of the things that I'm doing. No, excellent day off. Right. So what I'm going to do is I'm going to start with just some of the comments that people sent me. I just screenshotted them, and we can maybe address them, Dan. So Jeff, I'm not sure if you're here. You mentioned about a loss of confidence, placing trades, and experiencing too many losses. You know, like I think it's a really big fundamental part of trading successfully is how much you believe in what you're doing. Because if you don't truly believe in what you're doing, I would say it's impossible for you to consistently make money. You know, you can make money the next trade or a few trades, but as soon as you hit a couple of losses or a few losses like you mentioned there, what happens to you is you don't want to continue because you don't really truly believe in what you're doing. I can see you nodding your head there, Dan, so I don't know if you want to say something about that. I'm sure you're in agreement.
100%. I think a pivotal part of my trading journey was when you first start out, you just kind of use what other people are doing, but you use it in a sense where, one, you don't really understand it. And because you don't understand it, it leads on to number two, where you don't really believe in it. So I find that the majority of problems people have with their trading, and this has come over 5 years worth of coaching people now, the majority of the time, the sole issue that people have with their trading is that they don't believe or they don't understand in what they're doing. So I'm a massive
belief. Sorry to interrupt you. What do you think they can do to build belief?
I think part of it is what I did. When I used stuff, I automatically focused on the stuff that made sense to me. And I always say there's no right or wrong way in trading. There's only the way that suits you. You can make it as complicated or as simple as you like. But the way I started out was I just solely focused on the stuff that interested me and that kind of made sense. So, like, for example, I'd watch a few videos on your training on like moving averages. And in my brain, moving averages make sense. It's like a little light bulb went off in my head, and I put a lot of focus and a lot of time into learning about moving averages. And because I understood them, I then tested them, gained confidence in them. And now when I look at a trade and I look at a certain setup, I'm not just looking at it as, oh, the moving average is pointing up, or we've had a moving average crossover, therefore we should buy or sell. I look at it, I understand it, I'm confident in it, therefore I execute it. There's a really, really big difference between the two.
Yeah, very good point. Very good point. Now, that goes to Jeff and everybody, actually. So that's a really good idea that we should elaborate a little bit on. So when you've lost confidence in what you're doing, that means that when you're about to take the next trade, for whatever reason you decide that you want to take this next trade, you don't really fully trust it, right? Now, how do you build that trust? Well, based on what Dan just said, taking the moving average as an example, let's say a moving average was one of the reasons why you might take that trade. So it's at a 21-day moving average. One of the things that really simple things you can do is say, okay, well, it's at a 21-day moving average. I don't have a lot of confidence in myself. I don't believe in myself. I don't know if this is a good trade or not. Well, why don't we just look back at the last 5 signals? Nothing to do with your confidence. These are just going to be facts. Okay, what happened the last time it went to the 21-day moving average? Did it bounce or not bounce? What about the one before? And what about the one before? And then you can collect some evidence, some data, some evidence to say, yes, this indicator, this signal is a good one. Like, that's nothing to do with your confidence. That's just a fact. That's a fact. And if you do that with all of the different tools that you're using, you can start to say, well, okay, well, this makes sense because the last 5 worked. So I can think, well, maybe this one might work as well. And if you take it and it loses, yeah, again, you might feel like, oh my God, I'm doing something wrong. But you shouldn't go down that path. You should just think, well, this is, 1 out of 6 has lost. And that's that's it. So I think it's a really good way to build your confidence up.
100%. 100%. I think there's 2 things that I've learned from you, Andy. They apply to 3 things: business, life, and trading. And both of these apply to all 3 of those sort of circumstances. There's so much value in confidence, and you wouldn't believe how much importance momentum has got to play in what you do. So a lot of people I find, stuck around break even, or they're losing money because they've got 0 momentum in what they're doing. They're swapping trading ideas, they're swapping strategies. They end up having maybe a couple of winning trades and then 3 bad ones. They're not building up any sort of momentum whatsoever. It's about kind of getting yourself to a point where you're confident, and you maybe do go on a little bit of a streak. You do get some results coming in. And that is kind of like a catalyst or a catapult, just to kind of like slingshot you forward into more. A classic example was when I first started trading, I just took a small challenge, like a really, really small FTMO challenge. And it was about 10K at the time. I took it, I passed it, and the amount of confidence that gave me, and I had a lot of momentum behind me from a lot of winning trades. I then went straight into 50K, got that, went straight in from 50K into 100K, got that, all based off of just confidence and momentum. Not about strategy, not about, using all these different indicators. It was purely about confidence, momentum.
Mate, turn the music off. People find it hard to concentrate.
Okay, cool. Let me do this. Better?
There you go.
There we go. Cool. But as I was saying, it's more so having the momentum, having the confidence, and actually understanding what you're doing in the trade and why you're investing your money are the most important things. It doesn't matter about the type of strategy or the tools that you're using. It matters about, do you understand it? Are you confident enough to place the trade? And ultimately, do you have some momentum behind you? And you'll be surprised with the results that you can get.
Yeah. So next question or comment is from John, who, I'm not sure I understand all of it, but what the main thing that I got from what he's put is, essentially every time he thinks the trade is right, he presses the entry, immediately just goes the other way. That to me, John, sounds like you don't have a clearly defined plan and you're trading emotionally. If I always say this to people whenever I get the opportunity, because I think it's really important to remember that trading is a zero-sum game. Does everybody understand what that means? A zero-sum game. It means that if you win, you are taking somebody else's money. And I know it sounds harsh, but that's just the way it is. You win, someone else has to lose. And if you think about it, who are the participants in this game? The big players. I've worked for most of them, the investment banks, the hedge funds, the people with all the knowledge, information, and unlimited resources, right? The best technology, AI, computers, the best, smartest brains. That is all in the city and multiple cities everywhere. That is firstly your competition, number one. Number two is pro traders, pro retail traders, people that are the 5 to 10% that are making money consistently, okay? And then there's everybody else. So think about it. Think about what you are doing on a day-to-day basis, how you are making your trading decisions, and then compare it to, hey, I've got to compete with these firms. If I don't have a trading plan, if I don't have discipline, if I don't have an edge, a set way of doing things, what chance have I got to compete with these people? What do we think? Is there any chance whatsoever? I think it's pretty obvious to say that you won't be able to compete. You will not be able to get the kind of returns. Kevin's saying no chance, absolutely no chance. So you have to think of it like this. Everybody jumps in, they want to make money, they want to copy trades, they just want quick money, don't want to work, don't want to study, they want to build an edge. But reality is, it's like there's just no free money. Like, I'd love it if I didn't have to do any work in many ways. Sometimes I don't feel like working, but I have to work just as hard as I did 20 years ago, like to find good trades, to execute my edge, to keep my brain as focused as I can. All of these things, you have to keep doing it. Karam saying beginner's luck. Yeah, beginner's luck. The key thing, Karam, is having consistency. That's the only thing that's going to pay your bills. And if you have, look, let's be like I've told you what you can't do, right? So you cannot compete with these kind of companies and professional traders if you're just jumping into stuff and you haven't worked on a plan or an edge or any of those things. So you're like, I mean, sometimes I have a little gamble, right? If I go to Vegas, I'll go to the slot machines. When I'm doing that, I know I'm gambling. Like, I'm not going in there thinking, right, let me find the slot machine and there's my strategy and I'm going to win the jackpot, right? I'm just having a bit of fun, having a drink, having a little gamble. The problem is that this is how most people are approaching trading and expecting to make money. It's just not reality.
Mm-hmm. Absolutely agreed.
So we have to work on our edge, on our plan, because it's going to set you free. I always say to somebody who wants to who's thinking about coaching or thinking about, whatever, or going into trading, I always say to them, are you willing to work for free for 6 months? No expectation of making any money whatsoever. In fact, if I guaranteed you wouldn't make any money for 6 months, you'd have to just focus on working every day on mastering yourself and mastering your strategy. Would you do it? And that's a good question to ask yourself as well. You know, because most people are going into it hoping that by next month they can quit their jobs. But I always say to people, make sure you get at least 3-4 months of consistent results before you even think about stopping the thing that is paying your bills right now.
Absolutely. I think the one thing that I learned again from you as well, Andy, is the key to it is making sure that you have, like you said, your own edge, your own system, something that you're able to prove can get you results in the long run. And the way that we look at it is that your plan should be good enough for you to pitch it to a hedge fund or a big bank.
Absolutely.
And if you take your idea on exactly how you're trading right now, and anybody in the chat room can do this, take your idea on how you trade right now. You can put it on a little bit of paper. It could be one sentence. It could be 12 pages. Take that to a hedge fund and think, will a hedge fund buy into my idea? Is it good enough for a hedge fund to think, I could do that and it will make me money? Most of the time, the answer is a no, because people don't have that consistency. They don't have that system. They don't have that edge. They're using tools in the wrong way. But if you follow the right process and you gather and you get, if you follow the right process and you get the right tools, you use them in the right way, and you have proof that it's working for you over a matter of a few months, it's likely if you were to take it to a hedge fund, they'll say, okay, yeah, we'll use it. If it makes money, it's good enough. But it's about having that precise system, that plan that you need to follow. And a lot of people lack that, I think.
Great comment from Roy there to my previous question about whether you're likely to succeed without a plan and compete. More hope of meeting Jesus.
Yeah, probably.
Let's have a look at Mike's question. And then I'll go on to the next one. So one of our biggest issues is getting stopped out by the liquidity grabs from the big guys who know where most stop losses are likely to be. But on a small account, widening my stop results in such small gains that don't move the needle enough. Really good. I like this question a lot. Mike, so here's the thing that, and sometimes it takes somebody to kind of point out the obvious, but your results have nothing to do with your account size. If you think of it like this, if you understand, for example, as you put it, where the liquidity grabs are, what the big boys are doing, essentially, right? Why are you not trading with them? Why are you not trading in those zones, exactly the same zones? Why do you need to get in before and widen your stop? Your strategy doesn't matter about your account size. And I do get that on a smaller account, you're probably thinking more about the money, like the money side of it, rather than the price. Like, what are you trying to achieve from a small account? I think that's a good question for you to think about, because for me, a small account is an account where I can learn about my edge. So, the way what I always advise people to do is you build your strategy, you build your plan, you build your edge, you practice on a demo, you go towards a challenge account or go to a small account. It's like the next phase. Don't expect to make a living or anything significant from a small account. All we should do with a small account is add a little bit of emotion to our trading. In other words, like, okay, if you put a £500 account, you don't want to lose that. It's more valuable to you than a demo account, okay? But it's not so valuable that you're going to go homeless if you lost your £500, right? So you should be thinking about your edge. Like, if I follow my rules, can I make 5% a month on this small account? Doing what I think is a good strategy. And then if you can do that, then you can go and say, well, do you know what? I'm going to come to FTMO and I'm going to take 100 grand or 200 grand account. And now I can do exactly the same thing with bigger numbers and, you know, earn a proper salary. Does that make sense?
100%. If I can just add a small thing to it as well. When it comes to, you find yourself entering a trade and it always then going against you, it's a core sign that you are trading just like everybody else. Just like everybody else. The way that you look at the markets, the tools that you're using, the strategy that you're implementing is no different to the 90% of retail traders that lose along with you. So it's about getting to a point to kind of bump you up into that top 10% and think differently to everybody else. And Andy makes a really good point. If you've already identified that you keep getting stopped out by these big liquidity grabs and the big boys basically taking you out, it's like, well, you've identified it. You then have to take the action to try and ride that wave along with them. And that requires patience. It requires a little bit of skill. It requires consistency and discipline. But it sounds like, Mike, you've already made some really good progress in identifying it. Part of the problem is that you're thinking like the 90% that lose. Now it's time to take the action and ride that wave with institutions, which is actively what we kind of go and teach anyway. But ride that wave and take those actions, have that discipline in order to do it, rather than be caught on the wrong side all the time.
Take it as a challenge for you, Mike, for the next month or 2 months. Don't worry about how much money you make. You can even share it in the Facebook group if you like, and we can maybe do a follow-up in a month. Can you get a consistent result over the next 1 or 2 months, following what you think is a good plan? Don't worry about the money. You know, like I said before, right now you're not in the phase of making money. You're in the phase of developing your edge and your confidence. And if you can do that, and you have a statistical edge, that's the real treasure. Like I always say, this is a good thing to remember for all of you. Sometimes, like the other day, I placed an order. Like I placed an order on the euro yen. I shared it because it's a bit frustrating sometimes, even for me. Placed an order. It was perfect entry. Like I identified a great zone in the euro yen, and I thought I gave it a little bit of couple of pips, you know, movement. It missed me by, I think it was less than a pip. I said a pip, but I think it was like a pip, let's say. And then, of course, it tanked. I would have made a nice income from that. But one of the things I always remember and I always say is that, you know what, trades come like buses. They come all the time. The one thing that you need to know is you need to know the formula. You need to know the formula. If you know the formula to make money, it doesn't matter. Like you'll find another one. There's going to be lots. There's always opportunities. Yes, you've got to go find another one. But if you know the formula, you know exactly how to find the next trade. That's the most important thing. And that's what you need to develop right now. The formula, to make sure that you're clear and you believe it. Once you have the formula and you're clear on it, that is gold. That is the treasure. You've got treasure now. It's like money's coming to you. It's just a question of time. That's it. So that's what you need to focus on. Okay, so hopefully that makes sense. I want to go on to the next one because I want to actually cover everything. Someone's talking about being scammed. How do you recover from that? Somebody's like quite cautious, Philip, because he's been scammed, trying to find a reputable company. He's much more cautious now. Do you know what? Is there anyone in this group who's never been ripped off before? Doesn't, even if it's not in trading. I mean, I definitely have been on more than one occasion. In the one thing is, you know, I always say this. It's like, and even if it's not somebody being ripped off, like you make a bad choice, a bad investment, you lose some money. However, in whatever way it happens, you feel this negativity, this negative emotion, right? Been scammed, I've made a bad investment, or this person tricked me, or whatever, and it feels bad. But the thing is that you cannot change that event has happened, right? It's like whether it's your fault or someone else's fault, that's just a conversation, right? That's just an opinion. The only thing that you can change is how do you react to that bad event? And what I have found, and I know a lot of good traders, is some of the best traders, like they could have lost millions on the trading desk and you wouldn't know it. That I don't know if you can resonate with what that means. Like you wouldn't know it speaking to them that they lost 3 million today. And why that's important is that they don't let it affect their next decision. It's like that's happened now, it's gone. Can't change it. All I can do is focus and find the next best opportunity. And that's what I would advise you, Philip, is whoever scammed you, learn from it. What mistake did you make to let them scam you? And learn from it. And then say, right, okay, well, that's done. And now I need to make a new decision so that it can move me to the next phase of where I want, what I want to achieve. If you give up, if you let somebody else's scam stop you from making important decisions or taking risks, you've lost and they've won. And it's really that simple. You've just got to keep making positive decisions, and you will get it wrong again, but eventually you'll get it right. If you ask any business owner, any successful business owner, how many businesses failed before they had built this empire, right? Always the same story. It's like on repeat, right? So I think it's just important to keep moving forward.
100%. 100%. Couldn't put it better myself.
Should we look at the next one? I don't know if I can pronounce it. I'll call you Olu. Let's have a look. Welcome back, Andy. I've improved a lot. My personal account is doing okay. At least I take profits out consistently. I still struggle a bit with prop firms, especially small accounts, and I do better with big accounts. I would appreciate if you can talk a bit about taking profits, and what do you use or what do you look out in setting your take profits? So I think, do you want to answer this one, Dan, or do you want me to do it?
I can start it off, and then you can
sure.
put some input in it. I think when it comes to, I get this question loads, by the way, because I'm very much active with the students every single day. One of the most common questions I get is, where do I enter? Where do I put my stop loss? Where do I put my target profit? And the question in itself, the fact that people ask that question, means that they don't have a system, in my eyes. Because if you're asking for that, it means that you're kind of trading in the dark a little bit. Because ultimately, your entry, your stop loss, and your target profit should all be part of a system. And I say, like Andy mentioned, the first 6 months, you shouldn't really expect any money if you really want to take this seriously. The first 6 months is all data collection. It's all collecting as much data as possible to figure out the system that suits you best, to figure out, what is the optimal place for you to be putting your stop losses and your target profits. It's dependent on the individual, it's dependent on the strategy, and it's dependent on your lifestyle. A big part of what I teach, your target profit is always dependent on the type of market you are trading. So this is what we like to call at LTI market context. So someone can implement a really, really good strategy. On paper, it's one of those where they'll be able to pitch it to a hedge fund and it would make sense. And a hedge fund probably would buy into it, right? However, for some reason, they still use that strategy and they're still break even. Or in some instances, they're actually losing money. And you have to ask why. the majority of the time, they're using a strategy in a market that doesn't allow for you to do that as if it were in like a trending market, for example. So what I mean is, if you take a market that's moving sideways, that's really, really choppy, that isn't really moving anywhere. A prime example is how the dollar has moved throughout all of August. It has not gone anywhere. It's just been moving sideways. I can almost guarantee there will be retail traders out there that will be trying to trend trade the dollar because that's their strategy. And they might have a profitable strategy, but throughout all of August, they probably lost money because they're trading a market that doesn't allow for them to implement that strategy effectively. And that's part of trading. You have to always adapt. So what I'd always say is, with your market context, it's about the type of market you're trading in that moment. If you're moving sideways, you're not really moving anywhere, really long wicks on the candles, really choppy market, you should have the expectation that you should be in and out of the trade relatively quickly. It means relatively wider stops, and it means tighter take profits. If a market is in a really strong uptrend or strong downtrend, you then have kind of that room for error, and you can afford to have tighter stops and larger take profits. It depends on the type of market that you're trading, from my experience. But it all comes down to the type of strategy you're using, the type of market that you're trading, to kind of anticipate or decide where you're going to be putting your take profit. I don't know if you want to elaborate on that, Andy, whether you agree with it or not. Or
yeah, I mean, like, look, just I think the style of trading that you're doing also should impact what kind of take profit you should have. So if you're going for a momentum strategy, in other words, you're going in as the market is moving in the direction that you think it's going to go, and then you're going with that momentum, it means you're not getting the best price. Well, naturally, your take profit should be less. With that style of strategy, you'd go for a smaller reward to risk.
Yeah.
You should also, so whereas when you're getting in at maybe a limit order to go with the trend, if there is a trend, in that sort of scenario, you'd be looking more like a 2-to-1 or 3-to-1. But you should just use, like, as a general rule, in terms of, like, if you're asking, like, you know, what kind of areas should I put my take profit, like, you've got to think about, you know, I always say this, you know, if you were a seller, where would you be interested in selling it? Like, if you're going long, where if you were thinking about the other side, so you've bought an instrument and you're thinking, okay, where would I want to sell this? Like, where's the next supply level, the next key support level? Where is the Fibonacci 618? Where is the moving average? Put that plan together and think of it now. Okay, you bought this, but now if I was selling it, where would I want to sell it? And that could be a nice take profit just below that level, because then other people will probably be doing the same. And another thing you can do is something really simple in terms of market context, is just plot the average true range, and then that will give you an idea of whether this is, like, so for example, if I just show you. So this is the ATR on a weekly, but you can do this on a daily or whatever, or even a lower time frame if you want. But this here, you can see this is the euro dollar, and you can see historically where it's been as well. Okay, so this is like peak volatility, but you can see now it's back to this kind of area. So this is this kind of zone here.
Mm-hmm.
And if you go back, you know, you can see when the average true range is like this is the kind of market you're trading, like that. And look, looks the same, right? But this is what you're trading. So you could even go back and study these areas and think what kind of strategy would work in this type of environment right now, because we're in a similar sort of zone. Yeah. And so I think these are just little things that you can do, but I think all of this what we said applies here. Any questions, guys, on that? Let us know. So I want to speak a little bit more about prop firms, because a lot of people have asked about prop firms in many different ways. About rules, which prop do we recommend prop firms? And a lot of people kind of fail prop firms because of the rules. And yeah, I guess like some advice about how to pass a prop firm challenge. Do you want to answer this one, or do you want me to do it?
I can start it off. I think when it comes to a prop firm, in full transparency, they have their pros and their cons. Their cons are that you have to be able to trade in a certain environment where there are rules. So you have to make sure that you're not losing a crazy amount of money. You're sticking within a certain what we call drawdown. You have to make sure that your risk management is tight. You have to make sure that your numbers add up. A prop firm is really for somebody who already has a pretty good system in place and is ready to kind of take their trading journey to the next level. The pros, however, the pros of a prop firm, I believe, far outweigh the cons of just trading in a bit more of a controlled environment. Because what a prop firm does is it allows you as an individual to access more money to trade with, essentially with less risk. You know me, Andy, the students will know me. I always try and give a realistic example. So this is kind of the best example I can give you. A really, really good return on your money per month is, let's say, about 5 to 10%, right? So take someone who's managing about £1,000 right now. If you're that person that's putting £1,000 into an account, absolutely fine, but you can't expect to make a really good income from that, because realistically, you would expect anywhere between 5 to 10% as a return. Now, that £1,000 per month maximum really will generate you about £100 a month. With how the economy is right now, with how everything is working, £100 a month. I mean, I don't know about you, Andy, but it doesn't even cover my weekly food bill. Like,
nowhere near, mate.
It doesn't really touch the sides. So, on top of that £1,000 that you've got, you've had to put that aside. You've had to invest it. That £1,000 is your risk. A lot of people don't know how to manage that money properly. They're trading with £1,000 with a bit more of a gambling mindset. They don't really have the system. They don't understand how to manage their money safely, which means that they're trading with a small amount of money. They're putting it all at risk. Their risk is really high for really small return. And the majority of people end up losing that £1,000. Now, shift that onto a prop firm. If you gain the skills to be able to trade with a prop firm effectively, i.e., you know what rules that they require for you to trade effectively with them, you get access to much larger sums of money. It's as simple as that. Rather than trading with £1,000 of your own money, you can trade with $100,000 of somebody else's, right? Well, the numbers still are the same because we work in percentages. A good return on your money per month is anywhere between that 5 to 10%. With a prop firm, if you're managing $100,000 and you hit that 10%, it's $10,000 profit. Now, you don't keep all of that. You'll pay a small commission, but it's heavily weighted in our favor as a trader. We keep usually about 80% of the profits that come in. So realistically, from $10,000 profit that you're making, you're taking home $8,000. Look at it like this. You're trading with $1,000. All of your risk is $1,000. You could lose that and no one will give you that money back. Right? For a really small return of about $100. Or you can go with a prop firm, trade $100,000, get the same, put the same work in, get the same result, 10%, but you've made $8,000 take home. And if you fail your prop firm for whatever reason, if you lose money on that account, the worst thing that happens is that the account gets taken away from you. You know, you don't lose the money. You're not financially liable for it. So it's like, you have to weigh it up. You have to weigh up, okay, do I trade with £1,000 of my own money, put £1,000 of risk in there with the potential of losing it all? Or do I learn how to trade properly, utilize prop firm funds, lower my risk for literally 10x the return? Like it's a no-brainer. That's why I encourage prop firms anyway.
Yeah. Very good points. And I agree with them. I think I'll answer your question as well, Bihar, about which prop firms, because I find it quite fascinating that people choose prop firms that maybe are a bit cheaper, or prop firms that are maybe have slightly less rules. Now, in the interest of transparency, you know, we used to encourage people to what was that prop firm that we used where we could basically part it with our bot?
Nova,
right. At that time, the reason why we said, you know what, this is a good option is because we could pass that prop firm instantly. You'd have instant funding, and they did pay out. Okay, and they were good at paying out. Once that stopped and there was delay in payments and excuse or whatever, we stopped recommending it. And to be honest, those kind of prop firms, all of them end up disappearing. So yes, a few of our students made a bit of money. We made some good money from them, got some withdrawals from them, but eventually, you know, their model is not sustainable. You know, their model is not sustainable, and that's why they run out of money, and that's why they end up closing. So think of it like this. When you go to a prop firm and you look at it and you think, that prop firm's a bit strict. It has a lot of, or they need me to get 10%, and this other prop firm only wants me to get 8% or whatever, right? I wouldn't necessarily look at that as a negative. I would look at that as like, okay, but they're building a business model that is sustainable, so that if I can trade well, I'm going to get paid. So when you think about which prop firms, and I find it very interesting that I get this is a really common question. In fact, I've had this question sent to me multiple different ways. Like, which prop firm should I go with? Basically, for me, it's like FTMO. Like there's no like, you can get up to 600 grand of funding on your own name, and if you have a wife, you can also get another 600 grand under her name, right? That's 1.2 million. If you just want to stick with your name, even if you did 200 grand. Now what's the I don't know what people earn or how much you need to make every month. But if you have a 200 grand account with FTMO and you make $10,000, okay, 5%, and you keep $8,500, let's say at the end of it you're walking away with about £7,000. That is more than what most people on this group earn, and that's only 5%, and it's very, very attainable and very achievable. Now you're financially free. You are literally financially free now. So, and the thing is that when you achieve that 5% and you put that request in, guess what? They're not going to make up an excuse not to pay you, because they've been around since 2015. Now, I don't have any affiliation with FTMO. I met the guys when they first came to the UK 10 years ago. Nice bunch of guys. They were very new here in the UK at that time. Now they're the number one by a million miles. Okay, so you go to Trustpilot and you find the best prop firms, the ones that's where the majority of people are happy, and the ones that pay you what you make. It's really that simple. Now, what's my number two prop firm? Dan, I know you won't fully agree with this one because you didn't have the best experience, but I think it's because you went for a different account. My number 2 prop firm is 5%ers. Personally, I can vouch for those guys. They're proper traders, proper guys. They've been around for a long, long time. A lot of their guys, they used to work on the trading desk. They're serious people. They're not scammers. I know some people complained about spreads and things like that. Their high stakes account, I've never had any issue with it, but you can only get 100 grand on that account. So high stakes, I've never had any issue. Very similar trading conditions to FTMO. That would be my number 2. I did recommend the concept trading as well. I do think they're legit and they have good intentions. And I quite like them because they're very relaxed on their rules and their scaling plan is good and they do pay on time and it's very quick. My only thing with the concept is it's expensive. You are paying a lot, for a 10 grand account, for example, because the rules are very relaxed. But I think if you have bots and copy trading and all that kind of stuff, it is definitely a good option as well. They do pay. Never had any issues with them as well. There are some others as well. Dan, do you have any others that you know of? There are a few others that are decent. But I don't. Those
really, I just go off of my personal experience, which is FTMO and 5%ers. One I hear a lot of is Apex funding.
I'll tell you about those actually. Yeah,
I hear a lot about them. Haven't used them myself, so don't take it as like a personal recommendation. But I do hear a lot of people go with them. Apex or Alpha, one of the two. But
Alpha,
my personal experience is with FTMO and Fivers. They're the ones that I know. FTMO 100% have been the absolute best, most reliable. So I'd always say go with them.
Sorry, actually, I'm glad you mentioned Apex. Basically, they do futures. If you trade futures, you have 100% Top Step. Top Step are very good, very reliable, very trustworthy, good rules, 100%. So if you're comfortable trading futures, gold, silver, you can even do currency futures, but you need to learn the nuances of futures trading. It's a little bit different to FX, but I really like those guys. I think they're very, very legit. And I know one of my former students, Nikita, I shouldn't have called out her name. She's doing very well using Top Step. Very happy with them as well. Gets paid very well. They work slightly differently. The rules are different. I personally haven't used them, I've got to say, but I actually was planning to, because I had a conversation with her, and she said she highly recommends them. So I was going to give them a go. And but yeah, they've been around for a long time as well. I want to answer this next thing because I can give you the psychological transition from managing trade with a 1K fund to 100K, something that I'd be keen to understand. The great sum of money at risk, the more scope of emotions to creep in. Yeah, Mike, I'll tell you my trick that I use. So I have quite a few prop accounts, and what I do is I only ever look at one prop account and I copy all of my trades into the other ones. So for example, in my case, I'd be looking at a 200K account, but I'd be copying over to multiple other prop accounts, right? So if I looked at the sum of money that I'm risking every trade as a collection, it's a lot of money. But if I'm looking at a 200K account, it's very manageable, like emotionally. Now, in your case, you're saying, well, £1,000 versus 100. It's the same principle. So here's what you can do. You can actually just trade a £1,000 account, do the correct risk management, and just copy your trade into the 100K. So two ways of doing that. There are some free options as well. I can't remember the names of the free options, but there's Social Trader Tools. A lot of our students use that, and I personally like Traders Connect. So it's about $10 a month, but you can add lots of different things in there. You can copy all of your trades over. It will adjust the lot sizes. Plus, you can also, for your prop account, set like max drawdowns for the day, do all sorts of things to protect your account. So you just focus on trading your 1K account that you're used to, and then let the prop account work in the background. If you add all of the different protections as well, you won't have to worry. And the only time you have to worry about it is hopefully when it's payday. That's what I recommend. Mm-hmm. Andrew says, guilty. Stay away from Tiger Funded. Passed 100K and requested a 4,500 payout. Denied. Complete scam. Deflated and should have just gone with FTMO. Yeah, I remember that situation, Andrew. It's a shame. It's a shame for you. But yeah, they're very tempting. They have all these offers and things, but you've just got to be like, you've got to think about it like FTMO hardly ever have a sale. That, like, the most I've ever had is 10%, and that might be for Black Friday or something. Like, they're a serious business. They have a proper product, and you have to pay for that. It's just that you pay a little bit more. It's a slightly stricter rule, but you know what? When you make money, you get paid, and that's what you want. So 100% go with FTMO. And do you know what? Start with a 10K account. It's only like 80 quid, I think, something like that.
I think it's even less than that. I think it's like $18. So
right, there you go. So 80, whatever it is, $80.
Euros or whatever, yeah.
Start with that. You know, you could probably make, if you're good, you can make 500 quid, 1,000 quid, and then use that to pay for a bigger account. You know, it takes a bit longer, but you can do it as part of your learning. So, like in your case, Mike, one of the options is, instead of carrying on with your £1,000, you could go buy a challenge and try and pass a 10K account, or do what I suggested, which is like copy your trades from your 1K into your 10K challenge.
Mm-hmm.
Right, let me see if there's anything else. Anyone else want to ask us anything before we wrap up? We've been going for an hour, so I was only planning to be on here for an hour. Hope you've got some value from it. And thanks for joining us. But I'll take a minute to see if there's anything else that anyone wants to ask.
I think there's always a little bit of a delay from when we
ask we can take one more question, a quick one, if you've got it. Make it a good one.
What made you decide to look like Mr. T today?
I just wanted to be cool like him. I have got rid of my gold chains though. I used to wear them when I was 18.
Your gold chains.
I've gone to like just a silver chain now. Well, that's gold silver, to be fair, but yeah. But yeah, the big chains have been put away. But no, that's all good, guys. Everybody's quiet, so yeah, let's do this again. I've enjoyed having a chat, seeing some of you guys again. Let us know if in the future what kind of events you'd be interested in us running, and we can jump on again in a couple of weeks.
Amazing. Thanks, Andy, for your time. Thanks, everybody, for joining as well. Like we said, if you just pop in any sort of ideas as to what sort of content you want going forward, any questions that you have, we'll look at doing another event in the near future. But again, thanks for joining, guys. Appreciate your time, and hopefully we'll see you again soon.
Take care, everybody. Bye-bye for now.
See ya. Bye-bye.
Bye-bye.